Hi, this is Kirk with Forex Strategy Secrets. We want to talk to you about a jumpstart entry strategy. This is to find high probability entries with this little strategy. So first of all, we want you to know that we use 3 time frames: the 4-hour, the 1 hour, and the 30 minutes. So 3 consecutive time frames is what you use. So you're looking for on the larger time frame, in this example the 4-hour, when the male goes above the zero line or goes below the zero line. That's the direction of the momentum of the trade. It's not the trend, but it's the momentum of what the market's doing at that time. So you're looking for the male to be above the zero line and the hot lines to be separated. The hot lines are just moving averages. When the yellow one is go above the purple one, then that would give you a good entry. So you got two things telling you to get in. The blue and the red arrow, that would be the Norwood alert. So it helps you to know and bring things to your attention when a trade is getting ready to set up. The alerts are not to take trades, they are to just show you setups. So the way it works, you go to the larger time frame on this 4-hour. A signal that says we should be trading long. We go to the middle of the 3 time frames, which in this case is the 1 hour. Is it above the zero line? Yes. Is there the yellow line above the purple line? Yes. It's kind of not looking like it's really great, but it still confirms to go in that direction. So then we would go to the 30 minute, and 30 minutes said no. It's going sideways right there. You wouldn't want to take that trade. But where you want to take that trade is just as it's coming back up right here. And that's where you would time the trade. So you had to wait a little bit on it. You wait for the trade to set up. So when all the 3 time frames, the 4-hour, the 1 hour, and the 30 minute, are all in alignment, there's your high probability trade. So what we're going to do is use these lines that I put on here just for reference points. Right here, this is where you would start taking a trade on the 30-minute time frame. And so we'll mark that spot right there. Now, where you put a stop, we're going to teach you this is not a complete strategy. There's better ways of trading than this. This is just to get you in, and you can see that, yes, you can make a few pips. Where you see a swing low or a swing high, those are the areas that you place stops. Here's a swing low, here's a swing high. So if you're going short, then you put them at the top of the swing high. So right here on this one, the stop would be at the bottom of the swing low. And then you measure the number of pips from where you entered down to where you put the stop, and then you say, okay, in this case there's 15 pips, so you want to put your take profit 15 pips above where you entered. And so right here is where we would put that take profit. Yes, you can make a few more pips on these trades, but just use this as an example to learn how to get in and out of trades. Once you've taken a trade and you have your stop loss and your take profit set a 15 pip trailing stop. So as this price bar, this one happened to only go 15 pips, so it would have basically taken you out at your take profit before it actually triggered the trailing stop. Let's do one more. Where's the next thing? Now we know that 4-hour is still going long. So we're going to put another vertical line right here on this 30 minute. Let's confirm that on the 1 hour. The 1 hour confirmed right at that same spot. That's a place you could start taking a trade in this area right here. So with the 4-hour be going long, the 1 hour confirming that, and the 30 minute confirming that, it's time to maybe consider taking a trade right here. So we move the purchase price to right there. We move the stop to the swing low. Remember we put this stop loss? Okay, let's measure how far that is. That is 27 pips. Now we go from here up to here. It went 28 pips. So that one barely might touch it and take it out. What if it doesn't? It would go across and it could take you out over here. But it's still going to be a good safe trade. Because remember, you're at 15 pips, you're moving your stop loss to a break even and then putting a trailing stop on it. So in this case, you would have been well protected and you would have taken out a little bit of a profit on that. So what we've shown here is we have 2 different trades. One of them was 15 pips and the other one was 27 pips. The 15 pip one would have run further had we let it go. That the 27 pip moved right to the maximum. But that's a little strategy. That's how you would set it up, and that's how you set your take profits and your stop losses. Review. Take 3 time frames. the 4 hour, the 1 hour, 30 minute, the larger time frame, you find the fresh cross. That's the direction you're trading. You want a confirmation on the middle time frame. On the smaller time frame, that's where you time your entry. As we saw on this first one, we had to wait. But when it timed and they all three lined up, we had a good chance for a high probability trade. It went through a retracement, waited till they all lined up again, and then we take another trade in that direction. So that's the jumpstart strategy. Take a look at that. If you like what you see here, you'll be sure to want to attend the webinar where we're giving 15 secrets to become a full-time trader. Many more things will be shared with you in there than what you've seen today. Look forward to seeing you in the webinar, and we'll talk to you later. Check your email because there'll be other things coming along that will assist you in your trading.